Hello and welcome to Questor Plus. That's Questor with added fibre. I'm Harry Wallop and I'm here with Garry White, Questor's editor. What have you got for us this week?
This week, it's been quite interesting in the mining sector. There's been lots of talk about the mining boom being over, and it's actually quite an interesting point, really. We've known for a while that mining companies' profits are going to fall this year, the first time in 3 or 4 years. That's all down to falling commodity prices as people worry about China and whether the growth can be sustained there, but it's also to do with rising costs.
This is the cost of physically getting the stuff out of the ground, is it?
Yeah, well, there's a labour shortage, so there's wage inflation, and also what's happened over the last few years because there's been a boom in the commodity producers such as Australia, Canada, and South Africa. Their currencies have been really, really strong relative to the dollar, so all their costs are in currencies such as the dollar and the rand, but they sell their product in the US dollar.
Okay, and we've had some results out this week, haven't we, from miners?
Yeah, BHP, biggest miner in the world, profits down by a quarter.
That sounds an enormous amount to me. Did that hit the market quite hard?
It did hit the market quite hard and it didn't go down well. However, their operating margin is still 39%. They're still making profits of billions of dollars. There's questions about whether Australia and, Rio Tinto and BHP Billiton and even Xstrata have a big presence in Australia. Deutsche Bank raised the prospect of a recession down under earlier this week.
So is the problem then with Australian miners or is it with miners across the world?
There is an issue with miners across the world. They've been investing too much supply. For the last few years, they've got massive capex programs going, and China's been slowing down. So there's fears of a glut of products coming into the market, which obviously, if the supply is greater than the demand, the prices will fall.
The Chinese economy is starting to slow down from its very, very high levels of growth, isn't it?
It is, but it's still growing at a rapid rate. I mean, we would give our high teeth for this sort of level of growth over here.
So if I was going to hold some mining shares, is this now the time to sell or is it too late? Have I missed it?
No, I think now's actually the time to buy because I think these companies are going to have significant cash flows over the next few years. They're reining in on their capex. BHP has cancelled a $20 billion expansion in Australia. Now, this is the thing about the recession. Yes, there could be a recession in Australia because they're reining back on the spending. But this is going to mean there's going to be more cash on the miners' balance sheet, which they can actually hopefully distribute more of that to shareholders, and a recession in Australia would bring the Australian dollar down, which would help on the cost front. Profits were hit by $3 billion because of rising costs in BHP's results this week.
So, if I was holding lots of miner shares, I could be in line for a special dividend some way down the line if they're not going to spend all the money on
That
digging.
is the hope of lots of investors and lots of investors in the city. We shall see whether they're... But the reining in on the capex is an indication that this is potentially further down the line.
Garry, thank you very much indeed.